right, ladies and gentlemen, welcome back to the Passive Cash Flow Podcast. I'm your host, Aaron Fragnito. We have a very interesting guest today that I want to bring on the show to kind of talk about a bit of a new topic. This is Natalia Sosnina, and Natalia works with a company that buys distressed debt. Has been doing this for a number of years, and the name of that company is Terra Strategies. But how are we doing today, Natalia?
Hi, I'm doing great. Thank you for having me.
Absolutely. You know, I enjoyed meeting you at the iGlobal event where we initially met, which, by the way, for our listeners, is a great event to meet family offices and other operators in the space that are making big moves. And I enjoyed speaking with you, but I also enjoyed learning about what you focus on. I found it very interesting myself. In fact, as a real estate investor and entrepreneur, the area of distressed debt, people that or companies that are having trouble making their debt payments or over leveraged or so on. But very interesting space there. So how did you actually get started working in this space of distressed debt?
Well, lots of people find distressed debt very intriguing and interesting because they automatically assume those are the high profits are. That's not always the case. It can be the case, but not there by default. So I got to distressed debt. I've been in the conventional real estate. Originally, when I came from Russia, I just did some brokerage on the residential side. Then that spinned off to masters in real estate investment and finance and NYU. So that got me more on the commercial side. And then, as you said, the high profits and opportunities was always something that is always interesting to learn about. So I was always gravitated to that space. And I've started to work with someone who is, for whom I actually work as of today. So we kind of got back together as an analyst for basically on workout side. So we're doing CMBS distress debt restructuring as an advisor. And I basically worked as an analyst for him back in like 2012, 2013. And basically stayed in this space ever since. It was always the combination between either CMBS or distressed debt, and now it's basically the blend two together. So the opportunities in distressed debt are always very interesting, but it is not challenging because you definitely need to know what you're doing. Otherwise, you can lose a lot of money. Like all those people that bought that properties, that commercial real estate, they're very smart people. They bought building, like people who buy and spend multi-million dollars properties, they're typically very sophisticated investors, and it's not somebody who just happened to be unlucky. So those are somebody who typically knows what they're doing, and yet there's something went wrong. So that's why the opportunity become distressed for on another side of the spectrum. But you really need to be very specific and really know the methodology and what causes distress, why, how you can turn it around and things like that, because it's not just luck. It can be a little bit, but it's also how you making it happen. So after being a number of years on CMBS and distress that side, my former manager, who was actually somebody I just mentioned, I used to work as an analyst a long time ago, was opening the acquisition side, and which sounded like a great opportunity. And I got back on still working with him, just already on acquisition side. So that was kind of a slight difference, but all about the same.
At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. Right. Interesting. Wow. And so what are you seeing right now in the distressed market? It's January 2024. This will probably go out into this month here. So, but what we've seen is, the market is slowing down for sure. Interest rates have gone up the fastest they've gone up in the last 2 years than they have in 20 or 30 years. And that's obviously put some downward pressure on commercial real estate prices. It's put some people in tough spots who have a variable rate debt. and some residential homeowners as well, but probably more so in the commercial space and business owners, I'm sure. So are you seeing a flow of great opportunity in the distressed debt space right now, or are you kind of disappointed and thinking there should be more deals out there, kind of like what we're doing in real estate?
Well, there is always this thing that there should be more deals out there, but
Right, right.
we do have a lot of like a large deal flows that we can work with. It's all
Hmm.
about to getting it to the finish line. That's what the
Hmm.
focus is. So to answer your question, yes, there are opportunities right now. And the distressed debt space, specifically office, I guess, has the larger focus on the people where basically are ready to let it go. And it's just because lots of, for example, larger institutional quality investors, they have the specific mandate where, for example, office is no longer favorable, and they basically want to get rid from that asset class, which presents the opportunity for investors who don't mind this kind of risks. But the question is, what are they going to do with it? Because there is a reason why offices are struggling, right? So
Right.
there was a fundamental shift post-COVID where people basically ended up working remotely. Like, look at
Mhm.
us at this podcast. We're doing it remotely on Zoom, right? It's possible. And people realize that it's actually a new norm and not
Yeah.
necessarily willing to pay all those high rents that used to be the must. Office class historically used to be one of the safest asset class there because you have
Right.
long-term tenant
Yeah.
for very stable cash flows, and it was like no-brainer. Yeah, well, the
Mhm.
most conservative it's multifamily and office. Not right now, right? So right
Yeah.
now people go to offices sometimes a couple days a week, sometimes don't not go at all, and
Right.
sometimes they back on a full-time basis. It really
Mhm.
depends on other asset class. It's also there, but it's less so in the way that like so there is a little bit of like a staring competition, and
Mhm.
sometimes lender just kicking the can down the road just to kind of wait and see kind of
Yeah.
mood. So
Right.
when the investors are trying to give the bids and the lenders don't necessarily want to accept that bid,
Right.
because the moment they accept it, they realize the loss. And once they
Mhm.
realize the loss, it flows through their P&L and therefore it flows to the investor side. And we don't want to make investors unhappy on either side, right?
Right.
So
Right.
when
Mhm.
they don't have to and they can kind of drag out the time, it's still possible that, it, it could be a deal that can be done right now, but if they kind
Mhm.
of try to like, drag it out and wait and see kind of mode, that's kind of something that we're seeing right now
Right.
in other asset classes. Not that the deal definitely can be done, that there has to
Mhm.
be everybody has to be on board and everything needs to be make sense on each side in order
Yeah.
to make it work.
Mhm.
So
Mhm.
that's kind of what we're seeing.
Okay, interesting. Yeah, and we're kind of seeing the same thing when you're looking to acquire the asset in commercial real estate, right? So your company buys the debt of distressed assets, we buy the asset itself. And so what we're seeing is something similar, where we are talking to landlords, their rate reset, now they're paying a much higher interest rate, but rents have gone up a good amount, rents are pretty strong, so they're kind of chugging along and able to maybe make rent payments for now, but it's like then if something goes wrong, they're going to really be in a tough spot, or they're digging into reserves, repair reserves to operate the property. So, yeah, we are seeing the same thing. It's a little bit of just building that relationship, being in the right place at the right time. A lot of these people are going to say, "Oh, I actually now I'm ready to sell," because this happened or that happened in my life, So there's always different scenarios, but as we build those relationships and we're always talking to those landlords, that's generally who they call first when they are ready to sell. And that's really how we've gotten some of our best deals. It's who you know, not what you know. Same thing with realtors. If they, before they list a property, you want them to call you first and tell you about it. But it's even better to be direct to the owner of the asset. And in our case, the owner of the asset is the landlord. In your case, the owner of the asset is the bank, right? You're primarily dealing with banks a lot. Is that
Yeah,
correct? Hmm.
yeah.
Hmm.
Yeah, it's
Right.
on the lender side, yeah. But CMBS will have to deal with a special servicer, but idea is the same, really.
Yeah.
I mean, obviously, the huge question is interest rates, right? So if somebody has to refinance and they have to refinance today and the interest rate went through the roof,
Hmm.
they kind of have no choice because even though the maybe cash flows, for example, didn't change that much, but now your debt service is double to what you used to have, and then it just makes it unrefinanceable. And then now the question is, so what are you going to do? Are you going to just, come up with cash for the asset that is not worth it right now? How long can you wait? Because, once your maturity date is passed, then you kind of have to do something. It's not like you
Right.
can just say sorry. It's some that the conversation needs to get started and see what can be done. And
Yeah.
obviously, there are conversations that people can think, okay, well, that's like a new norm. Interest rates will get stabilized and okay, they go down, and then we're going to be back to normal. So just kind of wait and see. But obviously, we don't know, right? If we can predict the future, then we would own a private jet, every single one of us. So I guess we just have to stick with what the environment is right now and
Yeah.
see what's your, internal personal situation is and how can you go about it.
Sure, sure. Absolutely, absolutely. Yeah, and so yeah, more of a deal by deal basis is like we're seeing same thing, there could be a great deal here, but it's not like you just go on the internet and you find a great deal like we did in like 2012, 2013. We used to go to sheriff sale auctions and scoop up 2 or 3 deals in an afternoon, or go on auction.com and click a few buttons and boom, you had a discounted property under contract. It was pretty easy. Looking back, we really tried to make hay while the sun shined. We didn't really know how good we had it. So do you, was there a time like in 14 to kind of 20, did you see a lot of, were you in the space during kind of earlier in the 2010 to 2015 time?
Yeah, I was. Yeah, that's what I said. We did CMBS distress debt
Right.
restructuring side.
Yeah, yeah. Now, was that just like a waterfall of opportunity back then, like there was in real estate?
I mean, there were a lot of opportunities during that time because post going out of the crisis, they had to do something, and there
Mhm.
was the time when the special servicer was, I guess, more favorable doing workouts and doing something and what makes sense depending on the situation. Further down between like call it 2015 and next 5 years, there was less of that, right? Because then if you don't have to take the loss, then you're not going to do the workout. You can just, basically wait until the property recovers and things like that. So during that time, actually, I was on rating agency side. So I was doing primary issuance for CMBS loans
Mm.
because they were not distressed, right? So
Yeah.
when the markets are doing well, then you adjust. And then I get back to distressed side, basically now waiting for the opportunities to come back to action, basically.
Right.
And there are we're already seeing some, but it could be better, I guess, in terms of the execution. But there are lots of situations. You just need to make sure that you make a deal right for everybody because
Mm.
the lender needs to be on board, the sponsor needs to be on board, it needs to
Yeah.
make sense for you, and then you can make it magic happen.
Yeah, absolutely. What people don't understand about buying distressed properties is, they think that someone has to lose for you to get a great deal, right? And that's not always the case. A lot of times when you're buying a distressed asset, whether it's debt, I'm sure, or in real estate as well, that person really needs to unload that asset and really needs to turn that into cash right away or get that debt off their books because it's killing their business. It's killing them as a human being. That mindset of having a failing investment, in your portfolio can be detrimental to your business, to your bottom line, but also your human psyche, and so being able to sell that asset and get it off your books, or get that bad debt out of the way, even if you're taking a haircut on it, that can be actually a really good service. I know the sponsors probably don't feel that way at the end of the day. Obviously you're buying it for a discounted price on the best deals, but it really is a service, and it really is something that has to be done in our economy to keep things moving. Because if the bad debt doesn't get off the books, then that's how you have rundown, empty storefronts and banks that go out of business and things like that. It just kind of helps move the money. It helps the bank, turn that loss into just either a write-off or, a reproducing the loan again with an income. In real estate, it can help someone that's paying taxes, mortgage, and insurance on a property that just can't afford it, doesn't know how to manage it, hates dealing with tenants and toilets, and just cannot wait to get this thing off their books. And that's a nice day when they finally sign that closing paperwork and get the big check in their hand. And I've done that for a lot of people. And never at the closing table are they like, oh, no, we always shake hands. Here's $250,000. Great, thank you. And hey, it's a business agreement. They have something of value. I have something of value. So it is a beautiful thing, capitalism there. So I'm sticking up for you, and I'm telling the naysayers that, buying bad debt or buying distressed assets is a quality service that our economy needs. And have you ever had a sponsor say, thank you for helping me out of this situation or something like that? I mean,
Yes, we did.
yeah,
Well, because there is also what to your point, right? So you may be gonna take certain loss right now, but then you free up the money and you can do something else with the money rather
right.
than just being stubborn and say, well, no matter what, I'm gonna stick with it, and then it may just go down, 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 right? So
Yeah,
you don't know, right? So if there is something that you can do with the money that can just, it's business. Here you lose, here you win. It's just, the name of the game. You can't just be emotionally married to your property. You have
right.
to sometimes just let it go and just make a cold hard decision of, okay, so that didn't work out.
Yeah.
I learned my lessons. I just gonna make the best I can do from it and just move on, and then
Mhm.
do another deal that will generate more returns, in the
Yeah.
future. Like, like all those tycoons, right? So many of them has at some point in their life lost absolutely everything. And then
Mhm.
they just, recovered and made better and larger than they used to because they
Right.
have the skill set, and you just basically keep turning it. From the
Mhm.
investor standpoint, there is also this fear of, are you going to catch like a falling knife, right? So if you buy
Mhm.
something, what if it's going to go down even further? Again, yeah, if you can perfectly time the market,
Mhm.
then you're a Wizard of Oz. We can't do
Mhm.
that. We
Mhm.
unfortunately have to just make the best of what we know and do the best due diligence and the underwriting, and just try to make the best out of it. So if you believe in the deal, if you believe in the market fundamentals, if you believe that there is like some type of like turnaround plan that you can implement that makes the situation no longer distress and
Yeah.
turn it around, then you do it. But like try to predict when it's going to be the absolute bottom.
Mhm.
Who can do it? Like, it's, I wish we
Right.
could, but
Right. Yeah, of
tell me
course.
where to look. I want to
Sure,
know.
sure. Yeah, yeah. Well, that'd be your private jet that hopefully you pick me up on.
uh, don't
That'd
worry,
be
that's a plan.
At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth, so find out if you qualify at peoplescapitalgroup.com. Best podcast ever. All right. No, and that's it. Time, it's about time in the market, not timing the market, right? That's a famous saying. I'm not sure who said it, but it's about time in the market, not timing the market. People always say, oh, Aaron, I remember I was buying real estate the last 3 years, right? And they're like, why would you buy real estate now? It's the top of the market. People would tell me that in 2019, 2018, 2016. I remember an appraiser told me I should stop buying real estate because it's the top of the market. And I was like, the market grew for like 8 more years after that. So, but that's everyone tries to time the market. It's about time in the market. It's about saying, hey, this is a decent opportunity that I can build value in over time. It's not going to make me rich overnight. And quite frankly, if you look at something, it looks like it is going to make you rich overnight. It's probably a scam. That's what I found out in cryptocurrency quite quickly, and lost a ton of money. And and that's it. I mean, at the end of the day, if someone's over promising and the ideal looks too good to be true, it probably is. And some of our listeners know my story in cryptocurrency. I got caught up in the hype and over invested and didn't follow my fundamentals of investing in real estate that have gotten me to where I am today. And I broke those fundamentals. And luckily I broke it with an amount of capital that isn't going to make or break me. But I broke those fundamentals, and I paid the price for it. And but I know those investment fundamentals, and I teach them. And here I am myself breaking those fundamentals. It's so important when we know something to then follow it and follow that direction. There's a reason there's these rules. There's a reason we have these fundamentals. It's about time in the market, not timing the market. Every time I try to think I'm the smartest guy in the room and I know something, and I'm timing the market perfectly. And man, it's a loser of a deal. Obviously you want to look at the macroeconomics, you want to have a long-term strategy, take into account where the market is. But if you see a good deal and it makes sense and there's a long-term advantage to it, then strike on it. And that's kind of our mindset here as well. How long are you normally invested in some of these in distressed debt? I mean, can you like buy it and flip it sometimes, or are you more of like a long-term buy and hold type of investment firm?
Well, you buy debt, so it's not as easy as like you buy fee simple and then you can turn it around and flip next day. You can flip a note next day if you buy the whole note. We typically try to focus on CMBS, which is a little bit more complicated, and we typically not in the trading business. We more like a long hold. We like to have a plan and something that we potentially can implement. So trading, whether it's properties or notes, or it's just or QSIPs, right? Because CMBS, it's often in the form of QSIPs. You buy bonds backed by basically commercial real estate. While trading can happen, and it's not really the focus. The idea really is to try to make something bigger and larger from it. So we can if we see the opportunity, but the idea is basically not to trade in and out. You can, like, for example, a lot of people, like, for example, you mentioned cryptocurrency, right? So to be honest, I actually bought an apartment out of it. So fine.
See, well, that's it. There's winners and losers and everything. Yeah, you probably used my losses to buy that apartment, although I didn't lose that much.
Well, to be honest, like I didn't invest too much into that. I just like I think if it's something like new and something that you don't understand, you can invest maybe a little bit and you're okay to sort of lose it. Don't put too much money into something that really is like wild, wild west and you don't understand. Yeah. I just happen to be lucky. And let's face it, I bought an apartment in Russia for that money, so it's a lot cheaper. So, I just got lucky, yes.
Yeah.
But
yeah, I invested through the Voyager app, and Voyager filed bankruptcy. And I didn't really understand that when you invest through a lot of these cryptocurrency apps, you don't actually own the cryptocurrency. You are kind of like contracting. I don't even really understand it today. You're basically the app owns it. The company you're investing through owns it. And if they go out of business, so does your holdings. So it was pretty sloppy. Yeah. But there was some type of payout from the bankruptcy filing. Thank you, Mark Cuban, who, the reason I got into Voyager was because Mark Cuban was in it. And my buddies, were in as well. And I was like, oh, this is a great app. You get these, you can buy the Voyager token, you get a great return and all. And that's how they, suck you in there. But yeah, like what a joke, the whole thing, like these companies popped up, everyone got excited about it. It wasn't backed by anything. No one really can explain it. I can't explain to you cryptocurrency, therefore I should not have been investing in it. I can still to this day, I don't even really understand what happened, how I lost $30,000. I'm really not still sure. I guess the company filed bankruptcy at the bottom of the market, and then I lost all the gains, and then you get a little payout in the pen. It's crazy. And so rule number one, yeah, don't invest in things you can't explain, right? And if you don't know where the money's going, how it's held, how it's protected, how you're going to get that money back and cash flow on it ideally, then yeah, don't invest, right? Don't invest. It doesn't mean never invest in a new asset class, but take the time to learn that asset class. Don't believe all the hype. And I already knew these things. I already knew these things, but I got sucked into an exciting, shiny new object because I'm a human being, and that's what we do. Fear of missing out. It
Yeah.
works on all of us. Holy mackerel. So yeah, that's my story. And I guess I'm a little bitter about the whole thing. Just, you know what? I'm not bitter about losing money. I'm a big boy. It's not the first time I lost money before. What I'm bitter about is that I broke my own rules, and I already learned this lesson. I learned this lesson like 6 times in real estate, and I broke it again and I paid for it again. It's like, come on. At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth, so find out if you qualify at peoplescapitalgroup.com.
Yeah, I think that's actually a very important point. I think you need to be very focused. Like you need to know what you're doing and you need to be very focused because we get calls all the time that offer us distressed debt opportunity that is not what our focus on. So we have to tell them no, because if we're going to try to do all of them, we're going to just lose in general because A, we may be not as experienced and doing completely different strategy that requires this opportunity. B, we need to be more focused on closing what we know and what we focus on and what's our goal is. I think it's okay to maybe get sidetracked a little bit if you have like call it loose cash that you're okay to risk like I did on the cryptocurrency. But you have to have like one main goal that this is my main principle of capital that call it my investment mandate is XYZ and just follow that XYZ and be very strict. Like if you decided to yourself that you're going to buy this cap rate in this area, somebody offers you 2% more, just say no, because that's just okay. So there is a reason why it didn't work out and stuff like that. I think it's very important to be like disciplined about what you're doing with your money and how you're going to go about it, and just stick with what you know and be better in it, I guess.
Yeah, that's interesting. All right, Natalia. No, I love that. That's a great feedback there. How can people get in touch with you to learn more about possibly investing with you or selling you notes, possibly? How can they get in touch with you to learn more?
Of course, I think we have a form to fill out on the website, terrastrats.com. Then, if they can have specific situation where they're in distress or something like this, they are welcome to fill it out and we'll review it. And in terms of, obviously, opportunities from lenders and stuff like that, we look a lot on Intrap. We utilize it heavily because I think for the CMBS, it's one of the best databases that's out there, and Bloomberg, because the bonds that we are trying to target, lots of them are on Bloomberg, so we try to look there. So I know lots of like investment professionals utilize Bloomberg heavily and basically put their stuff in it. So that's something that is obviously heavily utilized on that side. So yeah, I mean, it's always good to know people in the industry and be in touch with who can be your next partner for that and that deal, and do something together, because while you can be a professional in something very narrow, you may not know something else. So if you partner up with somebody who is better in that field and that focus, that you may not be as well aware of that specific, call it area or subsector or something like that, that can be a good blend to make something beautiful together, because try to be the jack of all trades is very challenging and likely unexecutable.
Yeah, no, I hear you. Yeah, jack of all trades, master of none. Absolutely. I tried. not to be that, but some days I feel like that as a business owner for sure. Excellent, excellent. All right, and what's that website one more time, Natalia?
It's terrastruts.com.
Okay, very good. We'll put that in the show notes for our listeners, and they can get in touch with you through your website there. And that'd be a great way to learn more about what you guys have going on, possibly invest or offer opportunities there to invest in distressed debt as well. All right, great. So thank you so much for coming on here, the Passive Cash Flow Podcast. I really enjoyed having you on. I don't think we've ever had a guest on who buys distressed debt before, so I enjoyed learning about that. And it's a space that I could see possibly getting into myself down the road. I actually like the idea of buying distressed businesses and distressed debt and kind of turning them around, more so distressed businesses. That's always intrigued me. But excellent, excellent information here to give us. And thank you so much for coming on the show.
Okay, wonderful. Thank you very much.
Yeah, and to our listeners, of course, my name is Aaron Fregnito. I'm the host of the Passive Cash Flow Podcast here. And my friends, we actually have a new opportunity coming out. So you'll be seeing this if you follow us on social media or if you're on our email list. But go to peoplescapitalgroup.com and sign up to get on our investor list there. It's free to get on our investor list. And we have a new deal coming out, very attractive, self-storage development in North Jersey with incredible targeted returns. So take a look at that. It's peoplescapitalgroup.com. We have a new opportunity coming out. There's a good chance you won't see the opportunity if you're not on our investor list. Sometimes we do blast it out to the general public. Sometimes we don't. Sometimes we just send it out to our investor list internally, and it gets funded right there by our internal investors. So you'll never know about it if you're not on our investor list. So go to peoplescapitalgroup.com, sign up for our investor list. It's free. It'll take you 2 minutes, and you can take a look at our next offering coming up by doing that. But thank you again, Natalia. I really enjoyed our talk here. You have a great day. All right.
Absolutely. Thank you very much.